Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies So5 stock, and I'm going to prove how SoFi Technologies is undervalued right now because of the negative market sentiment that we are finding ourselves in. In today's SoFi news updates, we're going to be talking about how SoFi stock is going to be reflecting the overall macroeconomic factors of our economy and the overall stock market right now, which is why the current SoFi stock is falling, which has made the stock undervalued, which is a good buying opportunity. And this is why some analysts and financial reporters believe that SoFi stock could literally rebound in 2022, so we will be looking over their evidence for that. On top of that, we're going to be talking about how more institutions are buying and doubling down more on SoFi Technologies. So we see institutional backing for this particular company, and major institutions are buying up more SoFi shares at a cheaper valuation. We're also going to go over why SoFi Technologies is a buying opportunity despite the recent student loan moratorium, which we have talked about in other videos. However, I want us to steer clear of investors that think this stock will literally 20x, because there has been multiple YouTubers as well as financial reporters that say that the company is going to 20x relatively soon, and as you all know, I think this is too bullish, and I think this is honestly misleading people. Overall, I am still very bullish on SoFi Technologies, but we don't want to overhype the stock, otherwise that could lead to dramatic stock price pullbacks. Lastly, we're going to be going over some ratios to prove that SoFi Technologies is technically undervalued when we compare them to other fintech players and other companies in their respected industry, and we're going to do this by going over the price to sales ratio, the price to book ratio, and the price to tangible book ratios. So with that being said, remember to go and smash that like button right now for more SoFi stock news updates. Subscribe if you are new, comment down below your thoughts about SoFi Technologies, and without further ado, let's jump right into today's stories. So first, we're going to start off with the negative sentiment surrounding SoFi Technologies and the overall stock market and economy right now, which has pushed the overall SoFi stock price down around 55.37% so far in 2022. Right now, the current stock price is trading at around $6.50, which is very low. However, some analysts and even financial reporters think that this could drop as low as $3.50, and I've actually done a previous video on that. However, overall, analysts are relatively bullish on the overall company because the low-end analyst price target for the company over the next 12 months or the year of 2022 is $10 per share, while the average price consensus among professionals currently is around $14.35, while the high-end most bullish price target for the company that I could find right now from a reputable source is $22 per share. However, I personally think that their fair value is currently hovering at around $17 per share right now, but overall, according to 13 industry analysts, they are all pretty bullish on the company, with the majority of them saying to buy the company and the rest saying to hold the company. None of these professionals are saying to sell the company or that the company is going to underperform the overall market. So despite this recent pullback of the SoFi stock price, this has actually affected a plethora of other companies, so we need to consider that a lot of these growth stocks and technology stocks, including SoFi Technologies, are losing steam, not because there is something wrong with the company inherently, but rather because the overall macroeconomic economy and the macroeconomic market environment is relatively negative right now. But this is good news for investors because the company has lost so much of its value over the last couple of months. This puts the company in a deep value territory, which means that if you are a long-term growth investor or you want to buy this company because you believe in the future value that the company could create, this could be an exquisite buying opportunity. But with that being said, we need to be careful not to overexpose ourselves to just one single growth stock. I have a personal risk management rule where I never organically invest more than 5% of my overall portfolio allocation to a single stock. I have an initial investment between 2 to 3% of my portfolio, and then I use the remaining percentages up to 5% to average down my average cost basis, just in case the stock price continues to fall. And we are seeing that with SoFi Technologies, so I am continuously doubling down on my particular investment. If you didn't know, SoFi Technologies is a financial technology company, also known as a fintech company, and SoFi stands for social finance. SoFi Technologies basically has an all-in-one inclusive app that offers anything someone would need in terms of financial products and or financial services. And like we've talked about in previous videos, we had the extension of the student loan moratorium, which drastically impacted the SoFi stock price, causing it to drop even lower, and because of this, SoFi Technologies adjusted their revenues as well as their earnings before interest, tax, depreciation, and amortization, which made the stock price fall even further. Originally, their revenues were supposed to come in at around 1.57 billion, and now management has a 1.5 $1.47 billion revenue price target for the year of 2022, and likewise their EBITDA was supposed to come in at around $180 million, but because of the student loan moratorium extension, that has been adjusted to $100 million. However, this is past news that we've already done videos on. We want to determine if SoFi Technologies is a buy right now, considering that the SoFi stock is falling. And the SoFi stock price has been falling ever since November of last year. So this has absolutely crushed many people's dreams of the stock literally 20xing, because we have overly bullish analysts and financial reporters that are pumping the stock really for no reason. But we will talk more about that later in the video, about what we can actually expect from this fantastic growth stock. We have to remember that multiple industries and growth stocks are falling at the same time as SoFi Technologies, not because there is something inherently wrong with the business itself, but rather due to the rising interest rates that we have experienced. And this is a very big problem for growth stocks, because normally growth stocks borrow money and take on debt so they can grow and invest into their business, which means that when they borrow money now, the interest rates are much higher, which means they're paying more to grow their company, which could drastically and negatively impact their overall stock price. And we have seen this with SoFi Technologies. Now, the good news is that the CEO of SoFi Technologies is not only buying more SoFi stock shares, which is a fantastic sign to see, he also clearly believes that SoFi Technologies is going to be a key player in the fintech space, and he wants to take up as much market share as possible. And I currently 100% agree with him, and I think this is a very good goal for the CEO of SoFi and SoFi as a company to actually reach and achieve. So despite this market sell-off, it actually just means that we can find multiple gems, including SoFi Technologies, that are trading at a very good discount, which to me is a good buying opportunity for SoFi Technologies, despite negative sentiment that we see in the overall stock market. We have some plays that are in deep value territory, and for aggressive growth investors, this could be a fantastic buying opportunity. But with that being said, always remember to manage your risk very well. Now, what about talks about the SoFi stock rebounding in 2022? Well, I would say this is relatively speculative. I personally believe that SoFi Technologies is going to be very volatile between $6 and $10 for the remainder of 2022. However, after 2022 and 2023, we're going to see their revenues absolutely explode, and in 2024, they are going to become a profitable company, which is going to work wonders for the SoFi stock price. So at minimum, if you're willing to hold this company for only 2 years, buying now could be a fantastic opportunity. But again, don't overexpose yourself on your original investment in SoFi Technologies. Always leave room to average down your average cost basis in case the stock price continues to fall. So what is this financial reporter's justification about the overall SoFi stock price surging in the year of 2022? Well, he goes over how the company has fantastic leadership, they are growing their members very rapidly, they are increasing their revenue at over a 40% compounding annual growth rate, which is amazing, and he believes that the current stock price is extremely discounted and it offsets any additional risks from investing in such a speculative growth company, which is why he believes the company is going to rebound. He also believes that as the company acquires new customers, that is going to continuously expand their operating margin, which is true due to their fantastic flywheel business model of cross-selling and upselling. So if SoFi Technologies can continue to add customers and increase their operating margin and also upsell and cross-sell these customers, this is going to create huge momentum despite the offset from the student loan moratorium. Now, what I am disappointed about in this article is that they gave me no financial metrics or upcoming catalysts that could cause the overall SoFi stock price to break out. So that's something that is definitely missing from this article. There is no real reason to speculate on the overall SoFi stock price breaking out, even though I do believe it is definitely possible. And a reason for this is if we experience a short squeeze, because right now the stock is heavily shorted, which means that the company is artificially being held down due to the overall macroeconomic environment and very high short interest, in my personal opinion. However, on the other hand, I do want to say that despite the recent stock price pullback, we see great institutional backing. A great example of this is the Arizona State Retirement System purchasing a new stake in SoFi Technologies during the fourth quarter. They added around 140,000 shares, which is worth approximately $2.2 million. So this is overall very bullish. We see fantastic large institutions buying up millions of dollars worth of the SoFi stock price between the third quarter and the fourth quarter, and even even right now. For instance, Advisor Group Holdings Inc. grew its stake in SoFi Technologies during the third quarter by around 110%, and they now own over 227,000 shares worth around $3.6 million. We also have other LLCs and asset management LLCs purchasing new SoFi stock shares or even adding to their existing shares in the third and fourth quarter. For instance, we have companies adding $1.3 million of SoFi stock and other institutions adding up to almost $13 million in the SoFi stock price, which is absolutely insane. So overall, this is very bullish news in general, but now I'm going to be rather bearish in the next segment because I want you all to make wise investment decisions with both bear and bull information. We have seen a plethora of times many analysts and investors and even YouTubers pump this stock, and the main problem with this stock is an investor named Luke Lango, who has literally made a living misleading investors. And he was the guy that said that SoFi Technologies can 20x, and he talks about how it can 20x in the next 5 to 10 years all of the time. And he says it's basically one of the best investments ever and that everyone should be in on SoFi Technologies. And although I salute him for his enthusiasm and his bullishness on SoFi Technologies, because I myself am a SoFi bull and I personally own SoFi stock, however, I do not believe that the company is going to 20x. I think this is pumping the stock, and we really have no good metrics to say that the company is going to 20x, even though I would like that. Another problem that I have with Luke Lango is that Luke Lango doesn't own any SoFi Technologies. And this is listed at the bottom in small print in all of his articles. However, it's not really mentioned in any videos, and this is very dangerous. If you want someone who supports a company, you clearly want them to be invested into that company. Don't follow what somebody says, you have to look at their actions. And although Luke Lango says that SoFi Technologies is one of the best investments of our time, which could be true, he doesn't believe that enough to add it to his own personal portfolio. And if you don't believe me, for instance, we've used this article in the past of Luke Lango, who is quote-unquote a hyper-growth investor, who has said multiple times that SoFi stock could literally 20x. So this is a very long article that I have done an analysis on, but he repeatedly throughout this article says that SoFi Technologies is a 20x opportunity, 20x your money. SoFi Technologies can soar by 20x, which means that if you invest around $1,000 into the SoFi stock price, that it will turn into $20,000. He continues to go on that says SoFi stock will rattle off 20 times or greater gains. Not can, not could, but will. He's extremely confident. So you would assume if he is so confident in the SoFi stock growth that he clearly would have to own this company. He has said that SoFi stock can 20x. He has done multiple lectures, many videos, and he has written multiple articles about this, but yet he doesn't own any in his personal portfolio. Lo and behold, at the end of the article, it says, on the date of publication, Luke Lango did not have either directly or indirectly any positions in the securities mentioned in this article, which means that he does not own SoFi stock. So why are you talking about this company? Why are you pumping it up? Why are you saying that this company is the best thing since sliced bread, but yet you don't own it in your personal portfolio? This is why investors need to be careful about who they listen to. Putting back on my bullish hat, I am excited to see what SoFi stock can do in the future, but we need to keep in mind that this company is a speculative future growth stock, and right now growth stocks are being hit very hard. But now I want to talk about the overall valuation, and to determine if SoFi stock is a good buying opportunity right now, we're going to look at the price to sales ratio, the price to book ratio, and the price to tangible book ratio. We're going to start off with the price to sales ratio. Normally I would use the PE ratio or the price to earnings ratio, but clearly they are not a profitable company right now, and they're supposed to achieve profitability in 2024, so clearly I cannot use the PE ratio, so I'm going to use the next best thing in my opinion, which is going to be the price to sales ratio. So basically the price to sales ratio shows how much the market values every dollar of the company's sales. So we are comparing the current stock price to the company's sales and revenues. This ratio is very effective at valuing growth stocks that have not turned a profit yet. Otherwise, like I said earlier, we would use the PE ratio. We as investors can use this PS ratio to determine if the company is either undervalued or overvalued by comparing their PS ratio to other companies in their respected industries. Therefore, investors can consider buying the stock if the PS ratio is lower than their other competitors within their respected industry. However, with that being said, we need to compare the PS ratio with other ratios, and we shouldn't only look at the PS PS ratio, otherwise that would be very bad due diligence on our end. So ideally, we would want SoFi Technologies to have a PS ratio that is lower than their industry's PS ratio, and right now, SoFi Technologies does not meet that requirement, because currently, they have a PS ratio of around 6, while their industry has around a 2.67. Now, the reason why SoFi does not meet this metric is that they are clearly in their hyper growth phase right now, and as time goes on and they scale their revenues by a 40% compounding annual growth rate, eventually their price to sales ratio will drop dramatically, thus outpacing and becoming lower than their industry average. So that is why currently they do not meet the PS ratio. But now let's move on to their price to book ratio, which ideally we would want below 1. However, again, we would want to compare this to their overall industry. And for the price to book ratio, put very simply, the price to book ratio is used by investors to value a company for a potential investment. The PB ratio, if it is under 1, is typically a solid investment opportunity. And for SoFi Technologies, they are very close to 1. They are around a 1.35. However, if we compare that to their industry is trading at a 15.94, and in this case, the lower the better. So although ideally we would want it less than 1, as you can see over here, SoFi does not meet that, but they clearly are better than their respected industry and their overall industry average. Lastly, we're going to have a tiebreaker, which is going to be the price to tangible book value, and this is going to be a risk management ratio, in my opinion, which is a term that I literally just made up, but basically, we are going to offset risk by looking at the price to tangible book ratio, and ideally, we would want this as low as possible. The reason for this is because a company's tangible book value per share represents the amount of money an investor would receive for each share if a company were to cease operations and liquidate all of its assets. Put very simply, if a company goes under and they are forced to sell all of their assets, they are going to pay their shareholders anything that's left over. And if the price to tangible book value is lower, this means that investors are going to get a lot of money back if the company ends up going under. So this is basically just proper risk management, making sure that even worst case scenario, if SoFi Technologies goes under, we're not going to potentially lose everything. We're going to get at least something back. And in this scenario, they clearly outperform their overall industry. So with that being said, SoFi Technologies does meet generally these criteria. The ratios could be better, but ideally, if we compare SoFi Technologies to other fintech companies or their overall industry, I would say that this is still a good buying opportunity. However, again, proper risk management says that we should not overexpose ourselves to a single growth stock. We should be very well diversified within this overall industry, multiple sectors, to offset any potential losses. But as the current stock price falls, it just becomes a better value investment. But overall, this is a very good growth company in my opinion. I would love to hear your thoughts down below. Remember to go and smash that like button if you haven't already, and I will see you in the next YT video.